Reveal the holy grail in trading, A-plus setups using Delta, the best order flow tool you'll ever find. But in reality, what we're going to be doing is actually breaking down my A-plus setups and introducing an element of order flow. Now, is this the holy grail? I don't know about that, but we do have a lot of information that sets up for positive expectancy strategy. So this is going to be number 4 of the free futures course here on YouTube. And last time we broke down auction market theory and how we use the volume profile to understand how heavy-handed market participants truly enter the markets and position themselves to create these larger market moves. So let's dive right into this and break this down on the screen, and we'll see you guys on the other side right after this intro, and I'll see you guys there. Now, markets move in balance or out of balance based on volume. If the buy side is heavier, we should see expected higher moves, and if the sell side is heavier, we should see expansions to the downside. And this cycle repeats over and over again. But how can we turn this into actionable information? Last time I mainly showed you this chart, and we're going to be looking at this still. We're going to be adding components and talking about how these A-plus setups do take heed and turn that information to something actionable. This is where we get a deeper understanding of auction market theory that can be turned into setups. So today I'm going to be discussing the premise of 2 main A-plus setups that we use based on auction market theory and the volume profiles that we saw in the last video. So let's just dive right into it. Now, I'm not going to fully deep dive into what we talked about last time, but a quick little review is going to be necessary so that we have an understanding of how these A-plus setups do take place. And a lot of them are predominantly found on the volume profile. And then once we start getting into the execution aspect and trying to deep dive into them, a few little nuances, we're going to have to use other charts. So first and foremost, right, like I talked about just a few minutes or seconds ago, not really sure, but markets, right, they move based on the principle of balances. So if we have 3 balances like this, right, markets want to cycle in and around those balances. And what we see is prices, right, if they're at fair value, they're going to stay in their little homes, these little balances. So you have strong-headed market participants that get active at each extreme, right, and balances take place. Supply and demand is relatively equal. Now, if new information comes in and markets get heavy on the sell side, we're going to see the expansion that's trying to run towards a new balance to the downside, and then eventually fair value is found. And then likewise, if the buy side comes in a little more aggressively, we look for that prior balance and fair value is found. Strong in market participants, they keep prices in these balances, so they're going to get active at these ledge extremes, just as we have over here if this is a major balance. Market participants are going to want to hold those areas very well, and if there's expansive moves outside of them, right, that's going to be dictated by some new information that comes into the market. So using these principles, we can set up our highest probability trades. They're going to be twofold that I'm going to be talking about. So as you can see, over the last few days here, what we've seen is changes in structure, right? This is how markets change structure, by accepting into new balances that are higher or lower than those current balances. So if we look at this from this perspective, we got this large balance over here on NASDAQ. The bottom band is 23,330, the top band is 23,610, so a very wide one. Now when we get the acceptance fully into this balance after we've muddled below it, right, meaning we get several closes above, the idea is that we should hold the bottom band of this balance to continue that upside momentum. That's the exact trade that we took yesterday in our YouTube live stream, actually, so you can check those out on Wednesdays. You can see a little earlier on this one, and then this one into this balance low right here. This is what it represents. This is where the strong end of market participants are expected to get active, and we get this sweep higher. So today what we're going to be doing is breaking down how to find these trades and incorporating the idea of delta. So delta is going to be the main focus of our order flow, and delta comes in many different forms. What we're going to be focused on today is going to be delta profiles and where delta stacks up from a visual component on a profile like scenario on a histogram. There are other deltas that traders use, like delta divergence, delta on the footprint, right? Delta bars. There's a whole different world there. So let's dive into this. Setup number 1. So setup number one is going to be a continuation-based trade, right? It's going to be a pullback. We're going to be trying to follow the trend with this move. Pullbacks, in essence, are probably the easiest trade setup that traders can understand. It's generally finding the strength of the move and trying to follow it. It's not as many, it's not as simple as many YouTube videos make it look, where, for example, if we have a bullish move, you just look for breaks of these highs and pullbacks into those highs and continue the leg, right? It's a little more difficult than that, and using volume and the understanding of distribution theory, we can make a little more sense of this. So two things that we have to note before we even get started. These are going to be important factors for us as we go through this. It's not the be-all and end-all, but the first thing that we have to understand is that bullish trends, right, they make higher highs and higher lows, right? Very simple to understand that. As long as we keep making higher highs realistically, what we're going to see is a attempted continuation of that bullish move. So we could realistically make equal lows, but as long as these two come together, then we should have a bullish trend. Whether it pulls back to the prior broken highs or not, that's a different factor. But as long as even we have these equal lows, as long as we keep making new highs, there is potential for this move to shape up. Now on a bearish trend, lower lows and lower highs, right, as we note, again, as long as we keep making lower lows, there is the potential for this thing to continue. So how does auction market theory and volume profiles pull into this? There's one specific way to go about it, right, to dictate the highest probability trade that I look for. It's very simple, right? Whether we're entering into a balance higher or lower, the key aspect is the entry into a balance, right? So if we have a balanced area like this, a distribution, the key for the pullback is a movement into this area. Right? Simple as that. If price enters into that new balance to the upside or to the downside, so to the upside like this or to the downside like this, then we have the expectation to continue that momentum in that direction, since it takes a lot of volume to be able to enter into an area like this. So consider this, right? If the balance itself is multiple high volume nodes stacked together, that's heaviness of volume. It's typically difficult to move into areas like this, and it's very easy to move into areas of low volume. So instead of me looking for any kind of move inside or outside of the balance, I generally want to look for a move inside of a very thick balance to continue that momentum. Now you might be thinking, well, okay, if balances are generally ranges and chop, well, why would I want to do that? Because balances, right, the way that we look at them here on the larger profiles, on a 200, 300-day profile, they're very wide areas with a lot of potential, right? When markets move into these areas from above or below, the other side is the target, right? So if we have an area that's like 300 points on NASDAQ and we enter and we hold the bottom, well, you have the potential at least for a 50 to 100 point move, right, before you get to the other side. It's not going to be a clean move through to the other side naturally. Now, here are some of the nuances that we have to understand. Number one, real confirmed acceptance. What is that? What is real confirmed acceptance? Because we don't necessarily want to look at price from the perspective of, oh, okay, we're running into this balance from the downside higher. Let's say this is the balance low over here. And we don't want to say, okay, well, I'm going to be very exact and say 23,330. It's usually not that exact. It's probably within 10 points here on the NASDAQ, within 5 points on the S&P. And I don't want to look at this and say, oh my God, okay, we're trading 331. Let's start getting long, right? This is the pullback. It's up 1 point. It's accepted. A real confirmed acceptance comes about in two ways. Number one, the best way to understand it is if we actually get a session close within that area of significance. Meaning, if I get a close within a new balance area on NASDAQ or the S&P, whatever futures, I want to look for maybe a 50, 60 point move that accepts. So if I look at what happens here on the prior, or I guess this is on Tuesday, we get a move that closes in and around 23,370. So it's about 40 points or so, maybe a bit higher. And this is going to be a confirmed move that actually accepts into it. So what that tells us is that in the coming sessions, we have the potential to look for longs into this area, right? The next overnight, it closes even higher, approximately 400, 410 maybe, something like that. And this is going to be significant enough, meaning the next test of this area has a very high probability of actually holding out, so we can look for that upside momentum. And in this case, right, it goes all the way up to 520, so pretty close to the top band of the balance. The other way to confirm, right, a real accepted move is going to be based on the actual move. So if this happens throughout the day, if we get the expansion throughout the day, if I get a 50, 60 point move on the NASDAQ through the area, that's going to confirm that there is going to be a acceptance of the actual balance. And I want to look at it from the perspective of I can buy the pullback on this move, right? If we take a look at how that shaped up from even yesterday's perspective here on this NASDAQ chart, what we have is this clean accepted move, right, from the prior day. Let's take a look at this from the prior day over here, and we can see that it's actually approximately 380. Meaning even on the overnight session, if we're coming back into this balance low area, there is a high probability that the buyers are going to step in to try to hold it. So we get a cleaner acceptance into the next session over here. You can see like 520. So the next time that we trade in and around that 330, the expected move is going to hold for that long. This is why I'm looking for the pullback. Now there's another caveat that ties into this. The first test concept. What is the first test concept? I only look for these pullbacks and increase the probability that there's going to be something unique about it if it's actually the first test of the area within that session. So what I mean by this is when we get, this is the open where this dark blue starts. So when I get a move from a few prior sessions above, right, we're trading what, 400, 420 on NASDAQ, and my area is closer to 330, right, down here somewhere. So you've got a 90-point accepted move. The first test is not like the first touch. It's not the first time we actually trade it and then you just get along and you just start hammering buy. The concept is, can I get the actual first test of rotation? So in and around this area, this whole block is the first test concept. The first time that we test this area, it has the highest probability of actually holding and giving you some kind of decent profit, decent RR and return on the trade itself. If I've tested the area several times over and over again, that concept starts to kind of fall off. But it's still active as long as, let's say in a bullish trend, as long as we keep testing this area, as long as we keep making new highs from the tests, that area is still active. That's why I want to get in on the first test so I have the highest probability of having some kind of move to take profit from. Because if I fail to make a new high from the second or third test, then this trade is pretty much done, and I even miss the first chance to see if I can get something out of it. So the first time we test into the region, if we hold some kind of rotation, even if it's like 30, 40 point rotation, if it's not something expansive is like 60 plus points on the NASDAQ. So if it's not something necessarily expansive in this criteria, then I can still look at this as the first test that's not necessarily making failed highs, right, or failed lows if we're looking for that downside momentum move. If I'm translating this to the S&P, it's a very similar concept here where the first test of the area, as long as a real accepted move is like 10, 15 points. As long as I'm looking at this area, this is going to be the first test into a balance high in and around 30, right? As long as I'm not making massive moves that are like 10 points in the direction, then I can still look at this as an active region of that accumulation so that I can get along into that move. Now the third criteria, the third nuance is delta accumulation. This is what we're building up for today. And that delta accumulation is going to be based on the profiles over here, the delta profiles. That's what we're going to be looking at. Now, delta accumulation, it happens in two different ways. One of the main concepts that I'm looking for in terms of delta accumulation is going to be, if I'm into a low or if I'm into a high, I'm going to be looking at what kind of delta is clustered and accumulated at that area to give you more confirmation that this is going to be indeed a support zone for me to buy the pullback or a resistance zone for me to sell rallies into. Now the delta based on the pullback might give me different aspects to it. We talked about the pullback as we accept into a distribution. So ideally, the move into a new balance, if I'm trying to buy, it's going to be on the first test of the pullback within the balance. Now, the other concept of the pullback, which is another very high probability trade, right? It's still a pullback trade, is going to be what happens if we get very deep inside of the balance. For instance, if we have a balance that's 300 points, if we get 300 points into the good of the balance and we miss that first pullback, let's say for instance, we get a push, right? And then we pull back and then we get long and then now it's like 160 points higher. Everyone's going to be looking at this area and waiting, oh my God, okay, I missed the first time, let me get it on the second time. There are going to be areas within the major balance, just like this area over here, just like this area over here, that can act as barriers and stepping stones for the accumulation of the continuation of the move instead of just seeing massive 200-point swings constantly from high to low. Markets aren't going to shoot up from the low to the high, then from the high to the low in one clear line, right? There's going to be information that's going to stack in between that's going to help us. And the delta that confirms within those areas for those pullbacks within the actual balance are going to be different. So the second setup that I'm going to be looking for is a pullback within the actual balance at a certain point using more so the order flow. So the other concepts, they stay the same. The real confirmed acceptance is going to be as such, right? And then the first test concept is going to be the same. And then the delta accumulation is where things get a little different. Now, there are other high probability setups that we use like mean reversion, but we're going to save that for other videos. We've even done videos for that. But the easiest trades for traders to understand are going to be based on these two pullbacks, right? A pullback that actually accepts into a balance and then a pullback that is within the balance, and how does that look? So those are going to be the two main things that we're going to be talking about today. But first and foremost, we have to understand what we're looking at from the perspective of a delta profile. So these are the delta profiles here. They're split up session by session. So what does that mean? That means that this delta profile that's on the dark blue background is for the RTH, and then this lighter grayish background that you see here is the delta profile for the ETH. So what is delta, right? Delta realistically is the ask volume minus the bid volume at each price level. These deltas here are stacked at, I believe, 24 ticks. So every 24 ticks are just clustered together. The delta is the aggressive buying volume minus the aggressive selling volume. So if I'm looking at this from a step-by-step, right, the aggressive buying is market orders that are lifting the ask, right? And then aggressive selling is going to be market orders hitting the bid. So positive delta, you generally have more aggressive buying than selling at that price, right? With that, you have passive selling that is coming in naturally. And then with negative delta, you have more aggressive selling than buying at that price. And naturally, you have passive buying into that area. That's why when you see traders that accumulate all this blue positive delta into highs, all this red negative delta into lows, everyone's thinking, holy crap, they're selling into low, they're buying into the high, we're going to get this breakout. In essence, what's happening is that all this aggressive selling is getting trapped by continuous passive buying that's holding things up, and they're seemingly unlimited on the passive buy side, and they hold things up from that perspective. Likewise, the complete opposite into the highs. So in terms of these red blocks that we have over here, they represent negative delta, right? More contracts are aggressively sold or hitting the bid, and passive buying is just coming in. Now, whether it holds support or not, that's where the understanding of how to use delta and order flow comes into play. The blue blocks, right, that we have generally into highs represent positive delta. More contracts were bought aggressively, they're lifting the ask, and passive selling is coming in. So each horizontal bar shows the net delta at that price. And like I said, they're clustered within a 24 tick area. So it's key to remember that aggressive traders, they generally move the market. They create those moves. They use market orders to get filled immediately. And passive traders, they provide liquidity. They use limit orders sitting at the bid or the ask, right? Those passive traders that come in to support the other side of the aggressive traders that create the delta are going to dictate the movement, right? So if we have a lot of negative delta accumulated at a low, especially at a key low like this. This is the balance that we've accepted into. That negative delta is going to present a lot of passive buying continuously coming in for those aggressive sellers, and that's going to create the rotation back higher. So in terms of delta, positive delta blue, the aggressive buyers lifting the ask, the passive sellers are providing the liquidity, right? But are they being overwhelmed or not? Generally, if they're being overwhelmed, it's seen as bullish, and markets want to accept above that level. So if you have a lot of blue delta. Now, blue delta appears generally into the highs of moves, into key distribution tops, key distribution areas that represent some kind of resistance. In this case, what happens is these passive sellers, right, they're overwhelming the aggressive buyers, which turns into trap buyers pulling prices lower. Now, this is where things get interesting. This is in terms of extremes. If you have the extremes, tops of distributions and bottoms, when you are within a balanced area, when you're actually within a balanced area, just like this over here, this was the prior day. When I'm actually within a balanced area and I'm not at a top or I'm not at a bottom, the blue delta that we have over here is going to be seen as aggressive buying that's actually holding out. This is where the secondary pullback scenario takes place, the highest probability. So instead of me waiting for balances to be accepted from above, or sorry, from below to above and looking at all the negative delta that stacks up, when I have a move that goes through a balance, right, and I'm not necessarily waiting for the balance low or balance low, if I start moving through positive delta areas, those are going to be seen as regions where the buy side is very, very active and they want to hold support for prices to continue that momentum. So if I'm at a key extreme of a low and it's the first test, what I'm looking for is negative delta accumulation for traders to get trapped and passive buyers coming in for that large reversal. As I'm moving through a balance, right, in a bullish scenario, what I'm looking for is this positive delta to actually hold support structure and sustain the aggressive buying that created this move of expansion that actually starts going through that distribution block. So for instance, we have it in this area right over here. We have it in this area over here. So if this is the balance low, if this is the balance low like this, right, and that's the balance top, what we have in this scenario is a movement through that balance. The low is about 130, right? If I see positive delta stacking up as we get this expansion, the general idea is like, okay, we can potentially hold this low as the highest probability. But if this positive delta is here, there's a higher probability we hold that passive delta, positive delta. If we have the distribution top and we're moving through cleanly, now all of a sudden we're trading into this area, we're trading 250. Right? Is it reasonable to see 130 on the pullback? Not really. But if we have all this positive delta that's stacking up, that's an area that I'm going to buy that little pullback to continue the momentum move to the upside swing. So generally what we look at is negative delta into lows, positive delta into highs is seen as absorption. Right? This kind of absorption is really, really good for turning points in the market and large reversals. So when I see this kind of situation that shapes up into a balance low or a balance high, that really dictates that pullback continuation. The key caveat that we have is that when we're moving into a new balance area from below, let's say, it's ideal that you have positive delta into that low, right, as prices move up on the continuation. Now, if we haven't seen that area in a very, very long time, we could get the accumulation of negative delta, which we saw yesterday, that creates absorption. So you can see it over here into this block. This was on the overnight. And when they start creating new negative delta, right, all of this passive buying that's holding out the aggressive selling, right, into the negative delta, these passive buyers are providing liquidity. Right? They're trying to absorb and absorb and absorb all of that aggressive selling that's coming through. As long as we can hold this, right, we're looking for that move to the continuation. This is the first test of the area, right? This is the first test, and generally, when you have the negative delta that's coming through inside of the distribution itself, it can be seen as some kind of resistance point. But right now, since we're overall bullish, The idea is, let's see if that buy side can actually push through that negative delta. If it can't, right, these are going to be target areas where you can look to take some profits in this whole aspect, right? So what we're looking for with all of this delta, what we're looking for with these high probability setups is we're looking for support, right, or resistance based on the clusters. A cluster is an area of multiple stacks of delta that is accumulated together. So several stacks that are very lengthy. So for instance, this over here, right, this is an overall stack here and here, right, they're very, very long. Over here, this is a stack, you have these very long, large deltas. So these areas are going to be major support resistances in the market that we could use. When you see a thick block of positive delta, a big blue cluster, ask yourself, is it at a top of an area or is it at a bottom or within an area? Generally speaking, positive delta doesn't really happen too often at bottoms of regions, but you can see here at a top, right? This is more so a fade type example where a lot of positive delta clusters over here, and we look for that short and we take it down a decent bit. Now, when we have this kind of negative delta build up into the low, this is going to be the pullback in the larger general trend, realistically. So you even have scenarios that are within the balance. Obviously the delta changes, but you have areas within the balance that could present those pullbacks based on that delta. So if we break through negative delta clusters, those are going to be seen as resistance points for those intermediate pullbacks within the balance itself. So as long as we understand where these clusters of delta are, we can trade pullbacks on either side when we're within the balance itself. So traps and reversals, right? If delta is strongly negative but price doesn't go lower, this is what we call the trap and the absorption, right? The aggressive sellers are getting trapped into this area and we're looking for the fuel to squeeze higher. And it's not like, oh, okay, this is going to be a reversal or a fade of the overall trend. Instead, it's going to be an area where we're looking for a general pullback in the big picture of the move, right? The same applies with the trap buyers into the highs. So just to review delta, right, and we're going to review these types of setups. Positive delta, it means aggressive buying, right? Market buy orders are lifting the offers and passive sellers are coming in to provide that liquidity. Negative delta is aggressive sell side, market sell orders hitting the bids, and positive or buyers are passively coming in to support that, right? Whether the passive buyers are true or not, that's a different question. It depends on what happens with the actual move and the aggression against the delta. Because if you get a bunch of people that are trying to aggressively sell into a low, creating the negative delta, it's just telling us that the passive buyers are infinite and the passive buying is continuously trying to hold that area. Passive traders are always on the opposite side of that trade, providing the liquidity, and large delta clusters act as areas where battles happen, and you can see larger moves from that area used to support resistance lines in terms of those sessions. So even in future sessions, we know that there's a bunch of negative delta over here. Realistically, if prices come back into it, we're going to see what happens, because when prices try to come into negative delta as support, that's not at an extreme low. You generally have a move that shapes up to the downside unless there's more added information at that point. So the two setups, right? Let's look at them from just a picturesque point of view, and then we'll dive into those examples. So the highest probability setup on a pullback is if we make a move inside of a new balance, upside or downside. The first test of the area is going to be the region that we want to trade, right? So a real acceptance is if we close within it, or if we get a significant move, which is 10, 15 points on the S&P, 50, 60 points on the NASDAQ. The first test is the area that has the highest probability of the continuation, right? So that's the area that we want to trade. Now, if I'm buying at these lows, right, I'm looking for the accumulation of some kind of delta cluster. Ideally, into a major low, it's going to be heavy negative delta. Into a major top, it's going to be heavy positive delta. So when we go through the distribution, right, if we have this kind of continuation overall, and maybe we miss the first test of the area and prices are on their merry way within the distribution, we're looking for a minor level within that balance that can stick out. For example, something like this, within that major distribution. Let's say it's about 100 points away from the bottom, so I'm not expecting these monster swings to the downside, and we accept about 170. That area over here within the actual distribution, I'm going to be looking at it and trying to see if there's positive delta that's supporting this kind of continuation rather than negative delta. The positive delta within the balance itself and the directional push is going to give us more strength and opportunity for that continuation. Likewise, if I'm on the bearish move, if this area is actually negative delta, there's a higher probability that we have this expansion and continuation to hold from that area. Those guys are going to be very happy, and it's just like the case over here. You have all this negative delta. If we break through, that's going to be that pullback to look for the downside of this balance. Just like yesterday, into the major balance low, we haven't seen this area yet. These guys get trapped continuous. They bid into the end of the day, right? Throughout that, what we have during the day from the prior day, we have a continuation through this larger distribution that starts here. Positive delta stacking up, not exactly at the low. This is going to mark the continuation. This is going to mark the continuation. If this is a distribution top and this is a minor level within. So putting all that together, we have two high probability trades, some of my best probability trades in terms of the pullback with the introduction of order flow and delta. And with that, we're going to be diving into the footprint a lot more in the next class. And we're going to be breaking down the fluidity of order flow as well as the execution using the footprint, so we have a better understanding of how all this ties together for when I should click the button and get in and get out. So if you guys thoroughly enjoyed this video, drop a comment down below, hit that like button, hit that subscribe button, and we'll see you in the next video.